Hey gang, welcome to Time in the Market, the investing channel with a long-term focus. Taking a look at Meta, they just had their Q1 earnings call. The results were actually pretty good, but I think guidance has scared off investors a little bit. I think investors will look at earnings in the last week and kind of be questioning what's going on. Meta's Q1 earnings were solid. They beat their estimates, and yet the stock is down about 15.5%. Tesla was way behind estimates, and yet the stock was up 10% or so. And it really comes down to what were the expectations baked into the stock price going into those earnings. Tesla was down something like 40% year to date. Meta was up 42% year to date. Tesla was basically flat in the past year. That's after going up 10% in the post earnings bump, and Meta is up 137% in the past year. So it's just kind of a correction, reallocation, a movement back to the mean in a lot of these scenarios. And Meta is certainly suffering from some of the guidance they gave, but I don't know if it's that bad. I do own Meta shares. I would be really happy to buy some more if they get to the right price point. It's just a matter of deciding what that right price point is. If you look at their actual earnings, revenue's up 27%, while costs were only up about 6%, which means almost a doubling of income from operations, almost a doubling of operating margins. Well, not a doubling, up 1,300 basis points. Really solid results. Family of apps are doing really well. Daily average active people was 3.24 million in March 2024. That's basically half the world's population, or somewhere close to half the world's population. Really impressive. If you look at where the revenue is coming from, every geography is growing at a pretty good clip. US is up about 20%, Asia Pacific up in the mid 20s, Europe up in the mid 30s. The rest of the world up, in the mid 30s or close to even the 40s. Really solid results. China, I think, is growing close to 40%. As some of those shopping apps really advertise a lot on the Meta platforms. And in general, all of their platforms are doing well. Instagram is obviously doing well. Reels doing really, really well. Facebook's still solid. Even Threads has 150 million users, I guess, at this point. That seems like a lot, but who am I? I haven't really been on Threads in a while, but obviously X is kind of terrible at the moment in my mind. So maybe people are moving to Threads a little bit, but I don't really use either of them anymore just because I don't like them. At the end of the day, this business is a business that's driven by the family of apps revenue. That's 98% of the revenue is family of apps. That's Instagram, Facebook, WhatsApp, etc. 36 billion out of the 36.4 billion in revenue. Reality Labs at 440 million. And when it comes to operating income, they're losing about $4 billion on Reality Labs and making it up with a ton of money on family of apps operating income. And that's kind of the worry when it comes to the actual guidance that they gave. The guidance is pretty solid, maybe about 1% short of what the market expected. Not a huge decrease, still about 16 to 23% growth for Q2, but they are increasing their total expense guidance by about 2 billion and their capex by about 5 billion, and that's due to accelerating infrastructure investments to support AI. And when investors look at what's happened with the stock in the past, they look at this is a company that has invested a ton of money into Reality Labs. So far, that money hasn't done anything in terms of growing revenue to a really good clip to making that business close to profitable. It's still losing about $16 billion in operating losses a year. That's basically a 10% margin hit to a big company like this. That is huge. That is a bit negative. And if that never comes to fruition, investors are not going to be happy about that. And now you've got this other thing, generative AI, which is pretty cool, but is it ever going to be monetizable in a way that's going to become a big part of this business? Right now, they're basically saying, just like Reality Labs, you sort of have to trust us. We're building out a business that's going to be something big in the future, but it's years and years and years away. We're going to make investments that are going to push down the bottom line for the next couple of years, and eventually this is going to monetize well. Just look at Reels, what happened with Reels. They obviously saw a big margin hit in 21, 22, 23 as they invested in Reels, grew that up to scale, and now they're monetizing it and margins are recovering. The stock has done really well in the last year and a half. So now as they enter another investment cycle, is the same thing that happened to the stock a couple of years ago going to happen again as they start seeing margin pressure? Stock drops quite a bit and then recovers when that margin pressure abates, when they start to monetize their service. Because if you look at the service, it's actually pretty cool. They launched their AI service in Instagram, on Facebook, etc. You can access it via the app. I think it's one of the easiest generative AI services to access. I typed in, hey, draw me a picture of a brown rabbit. Here it is. It's a brown rabbit. It's pretty cool. If you want to try generative AI, this is probably the easiest way to go about it because you don't have to access some other website. You don't have to sign up for some other service. It's already there on your app, and a ton of people have Instagram. The question is, when and how are they going to monetize this? Obviously, their idea is always going to be, if we have more engaged users, if they're spending more time on our apps, they're eventually going to look at other ads. So even if we're not making money directly from AI, if they stay on Instagram longer and they look at more ads, that makes Facebook more money. In the future, they can insert advertising into the AI results. I don't know if people will love that, because if other people aren't doing it, that's a problem for Meta. Don't know how easy that'll be, but probably pretty easy because people are perfectly fine with looking at ads on Instagram, on Reels, etc. They can charge more money on a subscription basis for some of these AI services, and they can offer a lot of these AI services to businesses in the form of chatbots, things of that nature, if they have a Facebook page or if they have a Facebook store, things of that ilk. And I think Facebook, Instagram, etc., I mean, they're a pretty good app. They are solid in terms of their ability to integrate advertising and have that not be too disruptive. And if AI keeps people on those apps more, even if it's not monetized right now, maybe it'll help them grow their revenue a bit faster than it would in the future. But I think what investors are worried about is that this midterm period, in the next 5 to 6 to 7 years, margins will be pressured, investments will be higher. What does it mean in the long run? And it's the same question they have about Reality Labs still. This company is wasting $16 billion at the moment. What will that mean in the future? Right now, virtual reality stuff isn't all that amazing. If you look at Apple's Vision Pro, not doing all that amazing. Quest doing okay, but it's kind of a niche thing. They're launching their Ray-Ban glasses, which they say are doing well. But again, obviously revenue growth is there, but it's not really anywhere close to offsetting the investments they've made in the past couple of years. And if what they're saying is true, they're only going to ramp up those investments. They're really all in on Reality Labs. That's not changing anytime soon. And that's a huge hit to investors, because that's $16 billion a year they could be doing something else with, giving back in the form of a dividend, which they just instituted anyway, buying back shares, investing in other areas of the business. But if that eventually pays off, it could be a good investment, a good long-term investment. But I think as an investor here, you have to have a long-term outlook on this and on AI, because it's not going to happen overnight. It's probably not going to happen in the next year or 2 or 3 or even 4 or 5. I think this is an investment that companies are making for years and years and years out. And we'll see if that ends up being true in the next couple of earnings releases, if their margins continue to be pressured, if they show that they're even putting more money into their CapEx, into their total expenses, or if they actually start seeing results in the form of higher growth and or improving margins quickly. And I think the answer is probably not. It's probably going to take longer than the next couple of years for this to materialize. But I will say the same thing about Reality Labs. However, I still believe in Reality Labs. I still think that virtual reality is a cool idea, and eventually it'll come to fruition. And I think the move towards more wearable glasses, these are not Meta Ray-Ban glasses. These are just regular glasses. But if I could have glasses that look like this, that could have an AI-powered assistant built into it, that could last, multiple days without me having to charge them, that I could say, hey, Meta, tell me about the potato famine, and it'll just give me all this information. I could obviously do that on my phone. I could obviously do that on Alexa or whatever, but having that in the form of wearable eyeglasses that don't feel any different than other eyeglasses would be pretty cool. And as AI becomes more advanced, more and more potential gets unlocked. And I think that's why this is interesting for me as an investor, in that there's finally something that goes hand in hand with Reality Labs. They're investing in generative AI. They could put that on their apps pretty easily. Those apps are very accessible, and now generative AI is very accessible to users. Probably the most accessible AI platform there is at the moment. Don't think it's the best. It's not anywhere close to the best, but they're going to expand upon what they're offering right now. And on top of that, all of that AI investment is only going to help make Reality Labs better, make those glasses better, make whatever they're investing in next better. And all of those investments aren't showing up on the revenue side yet, and they're not going to show up on the revenue side for a while. But once they do, could be a pretty interesting investment. So as we kind of look at Meta, they've been doing relatively well, had a bit of a down year in 2022, again, as they kind of invested in scaling out Reels, not really growing it. Now they're growing it. They're investing in AI. The question is going to be, are they going to have another one of those slowdown years where, like, maybe there's a bit of a slowdown in the advertising market, maybe some of those Chinese companies that now make up 11 to 12% of their overall revenue start cutting back because, Temu's spending a lot of money on Instagram and Facebook. That's a benefit. But once they start slowing down their spend, what's going to replace it? That's the next question mark for Meta. And as we look at their valuation, disclaimer, video is purely for informational, educational, and entertainment purposes only. It is not investment advice. Please do your own due diligence and all of that good stuff before investing, and do not treat any opinions, they are opinions, as advice to follow a particular strategy. So as we look at Meta, let's see what they're trading at so I can actually adjust it. Let's say they're trading at about $418. About a 4.1% free cash flow yield. Not too bad for a company that's growing at about 17%, expected to grow at about 17% for 2024. Pretty decent free cash flow yield when you consider some of these other stocks that are trading at lower free cash flow yields and growing at a slower clip. They have bought back a decent amount of shares in the last couple of years. I expect that to continue. They instituted a 50-cent dividend for 2024. I'm expecting that to grow at about 10%, but they have the free cash flow capacity to grow that at a much bigger clip. So if you want to play around with that, you can just put 20% growth here. Certainly feasible that they grow it at 20% plus for the next couple of years because they have the free cash flow to do it. As we look at the overall growth, I'm kind of assuming slightly lower growth than what the market is kind of expecting here. Maybe I'll cut this down to 8% as well to kind of be in line with the market. So the estimates here have it at about 238 billion by 2028. I have it about 235, and my margins are a bit less aggressive as well, simply because I think this investment cycle for generative AI, for Reality Labs, will take a bit longer to play out before it's actually materializing in the revenue and materializing in the margin. So while it might start materializing in the revenue faster, they might start seeing some revenue improvement from those products by 26, 27, 28. I think margins will still be pressured by the investments they're making there. Then we're having about a 30% buyback, which is about 15 billion or so every single year, which is kind of in line with what they've done in the past 2 years. I think they can probably tick this up. So if you want to be more aggressive on the buyback side, play around with this. I'll leave a link of this file down below. Just hit file, make a copy to play around with it. You can change the revenue, you can change your margin predictions to whatever you want. For a company like this, I think 4% free cash flow yield, somewhere in the neighborhood of 4 to 5% is kind of the right number. I have a 50-50 weighting on the 5 to 4% free cash flow yields. If you want to get more conservative, you can certainly go up to 5 and 6%. More aggressive, you can go up to 3 to 4% over here. With this in mind, at the $418 price point that is trading at this morning, I get an expected return of about 9.6%. Seems reasonable for a company like this. It's kind of trading where it should be trading in my mind if you assume that they're going to continue to grow into the kind of the high single digits, low teens, high single digits for the next couple of years. If you assume that margins will be pressured, but kind of start climbing back towards the low 30s that they've been in the last couple of years outside of the 2022 investment year. They've certainly gotten more lean as a company. Their number of employees has dropped from 89,000 in 2022 down to something like 66,000 in 2024. And I think they'll continue to run lean for the next couple of years, even though they're investing in capacity on the AI side. I think a lot of those investments, I think, are more about building out infrastructure, data centers, buying chips, building their own chips, all of that thing for inference, for analytics and things of that nature. So as I look at a target return of about 10%, get a fair value of $404, close to where it's trading today. So it seems like a reasonable price point for me since I own this stock already. I'd really want something more attractive because there's so many unknowns. The investments in generative AI, the investments in Reality Labs, are those ever going to pay off? I'm always worried about a correction when it comes to a marketplace that's been this hot for the last year. Like I said, Meta was up 140% in the last year. That is impressive. So yes, that is driven by really good growth on the top end and bottom end of the last year. but now maybe that growth will be pressured a little bit on both the top end and bottom end. How will the market react to that? If there's an overall market correction because interest rates are staying, risk-free rates are staying elevated for longer. Now the 10-year is basically going to stay at 5% for a while, according to what's happening in the world of inflation. I think that's the reality. If you look at a risk-free rate that's in that 5 to 5.5% range, a lot of these stocks probably have to be reevaluated on that, especially if growth starts to slow a little bit. So for me, I think a target return closer to 15% on a lot of these stocks now is more appealing, especially on stocks that I already own, that I already have a significant holding of. If I wanted to increase my holding of Meta, I'd probably be closer to a target in that like 320 to 360 range. If this stock keeps falling a little bit, would I double down on my position in that range? Probably. Like 360s is probably when I'd start nibbling. Honestly, even right now, buying at today's price point seems reasonable to me. It doesn't seem crazy aggressive. It seems reasonable. It's getting to a price point that's reasonable, 404 to 418. It can drop another 3% really quickly, no problem. And then you get to a reasonable price point, a fair value. I think something in the 360s is kind of getting more interesting. Something in the 320s is getting really interesting. Something in the 260s is like, I'm doubling down. I'm buying a ton of this stock. That's kind of where I'm at with Meta. Seems like a fair value right now. Seems fairly priced, essentially. Pay that dividend. They're going to buy back shares. If you think they're going to buy back more, they certainly could. Kind of gets to a price point where now they feel like their shares are undervalued. They're going to buy back a ton of shares. They're going to use half of their cash flow to buy back shares, and that gets their fair value close to where it's trading at this morning. So doesn't seem unreasonable. Seems fairly priced. For me, am I going to buy more? Probably not. I might start buying just a tiny bit here and there if it starts falling under 400. Pick up more shares as it trends towards the 350s, and then if it ever falls into the 200s again, I'll buy a ton more of Meta, because I think the future here is pretty bright. I think the investments they're making are eventually going to pay off, and I think if you are an investor who is looking at the very long term and buying at today's prices, you have to believe that they will, that generative AI can be monetized effectively, that Reality Labs will not lose money forever, that their family of apps will continue growing and doing a good job on advertising to users and keeping engagement up. And then, again, I haven't talked about TikTok being potentially banned. Who knows if that's going to happen, if that'll be challenged in the Supreme Courts or in the courts in general. But obviously that could benefit a company like Meta quite a bit, because Reels and TikTok are kind of the competitors out there that are going hand in hand. And if TikTok is suddenly done and the Chinese company doesn't want to sell it to an American company or doesn't want to give up its algorithm, then people will potentially just move into Reels. And now that Reels are being monetized at a really good clip, that could really benefit Meta as well, which could be potentially more upside to the revenue that isn't reflected here at all. And on top of that, if they actually start monetizing Reality Labs in the future, if they can improve their margins to a much better clip, because remember, without Reality Labs, this is a 40% free cash flow business, and that becomes a big difference in the valuation you look at when it comes to a company like this. Because essentially the market's kind of assuming, and I'm assuming, that even 5 years from now, Reality Labs is still losing money. They're still making investments on Reality Labs, and generative AI, while maybe growing revenue a bit, is still probably putting pressure on margins when it comes to comparing them against a pre-generative AI investment cycle. So wouldn't say these are too aggressive on the margin side. Might say they're kind of aggressive on the revenue side, because once you get to a certain price point on an advertising-based business, competition's out there. Advertising does have its ups and downs, and it certainly can be harder and harder to grow from a $150 billion starting point than it was from a $50 billion starting point. So getting from 50 billion to 150, maybe not as hard as getting from 150 to 150. And we'll see where that goes. Let me know what you think about Meta. Let me know what you think about the earnings. Are you upset about the earnings? Are you surprised? Do you think it's a good buy at this price, or are you waiting for a lower price point? I don't necessarily think it's going to dip to 200s, but I would love it if it did. I don't actually even think it's going to dip into the 350s, but I think I would start buying some shares at that price point if it did. Although I think at today's price point, it's pretty close to being fairly valued if you're looking for a 10% long-term return. So that's my thoughts on it. Let me know what you think in the comments down below. Like, subscribe, all that good stuff. Bye.